So give us some levels you're targeting, Jane, on the euro and sterling, for example.
Well, in euro dollar, I'm still a dollar bull, fundamentally a dollar bull. I don't think that the factors that have drawn money into the dollar this year are yet at an end. So I think we could perhaps go down to 112. But I do think the positive dollar story will end. I think by the middle of next year, we will be looking at a much more negative picture for the dollar. I think we will be looking at perhaps slower growth, a peaking in US interest rates, and a fading, of course, of those tax cut boosts. And I think in addition to that, that will mean that the market could be more focused on that budget deficit in the US, which is not looking pretty. But I think in a scenario where the market is less concentrated on faster growth, I think that budget deficit issue could become a little bit more apparent. So for now, I'm dollar bullish, but I do think that that will change by the middle of next year.
What will it be that it changes? We've got the Fed minutes coming up a little bit later on. The Fed is definitely on a gradual glide path to higher rates. But looking at it from the European perspective, you've got a whole series of issues lined up. You've just been mentioning what's happening in May next year. You've got, obviously, the German political situation developing, Brexit's developing, Italy's developing. There's a whole bunch of factors that are coming together. Can Draghi do anything in that kind of scenario? Can he really start to tighten? Would the European economy take higher rates at this point?
I tend to agree with you, because the guidance that we've been given by the ECB right now is that they could be hiking maybe through the middle of the summer, towards the end of the summer of next year. So 2019 H2, they could be hiking. But given the scenario that you've just laid out, that we've been talking about insofar as European elections, etc., it could be that that does not happen. And therefore, we do potentially, or we are looking at potentially a weaker scenario for the euro during 2019 as well. Now, it's difficult to be too firm on that. There's so many different moving points with respect to Italy's budget, with respect to the European elections. It's very, very difficult to predict what will happen. But there is a scenario when it could be difficult for the ECB to push through with those.
And do you think that's politics, or do you think it's data that ultimately gets us there as well?
I think it's a little bit of both. I mean, let's face it. For years, we've had disappointing inflationary data from the eurozone. So we're not going to suddenly see an acceleration, a big acceleration in price.
How does the market react when that moment comes?
Disappointing. I think the market will be disappointed.
You said 112. Can we go lower than that?
Never say never. It is definitely possible. But for now, I'm putting my hat on 112 and watching the data, watching the politics.